Hi again, Mullenites. I hope you're all doing really well. So it's time for another update on the stock. We've been tracking the stock closely, other than about a week's break recently. But as of yesterday, Tuesday, 10th of September, Mullen is continuing its downward spiral. The stock dropped another 3 cents, closing at 14 cents per share. This marks the 27th or 28th consecutive day that Mullen has been below $1, which is a critical threshold for companies listed on the Nasdaq exchange. So let's dive into what this means and what's happening with the stock. So first off, a 3 cent drop may not sound like much, but when you're trading at such low share prices, it represents about 17.6% decline in market value in just one trading day. So it's not pretty. To put this in perspective, Mullen is now down over 85% year to date. It's clear that the market sentiment is heavily weighted against this stock, and it's not surprising given the massive challenges Mullen is facing. Now, let's talk about some of the major issues surrounding Mullen and why the stock keeps struggling. So one of the key factors is their upcoming special shareholder meeting, which is set for September 12th, I think, so pretty soon. Anyway, the agenda includes a proposal for yet another reverse stock split, which Mullen would need to stay listed on the Nasdaq. They are proposing a split in the ratio that could be as high as 1 for 100, meaning every 100 shares would become just one. If the proposal goes through, the goal of the reverse split is to bring the share price back above $1 and comply with Nasdaq's listing requirements. And given where the stock is at now, we're looking at something that's going to be at least, at a minimum, 1 for 7, 1 for 8. Anyway, here's the thing. Even though this reverse stock split is designed to save the company from delisting, it's not necessarily a long-term solution. Reverse splits often lead to further declines in stock value as investors lose confidence in the company's ability to turn things around. And in Mullen's case, this would be just the latest in a long string of reverse splits which have failed to bring lasting value to the stock. Anyway, another major issue that's weighing on the stock is the massive dilution from recent equity raises. Mullen has issued a large number of convertible notes and warrants in exchange for much needed cash, but these financial instruments allow the holders to convert them into common stock, significantly increasing the number of shares on the market. The latest prospectus they filed with the SEC last week mentions 350 million new shares that could be issued through the exercise of these warrants and notes. That's a huge amount of dilution, which inevitably pushes the share price lower because there are simply too many shares relative to demand. On top of this, Mullen recently announced their second largest sale to date, a $210 million deal with Volt Mobility in the UAE. Now, this sounds like good news on the surface, and indeed the stock briefly rallied on the back of this announcement, but it's important to note that the market is still skeptical. Why? Well, the initial deposit for this deal is only $3 million, and the rest will be spread out over 16 months, meaning any significant revenue boost from the deal is still some time away. Plus, Mullen still has to deliver these vehicles, and their ability to scale production quickly enough is going to have some question marks around it, I'd have to say. Anyway, we'll see. That brings us back to the stock. Despite some potentially positive news from the Volt deal, the market remains bearish. The focus is squarely on the shareholder meeting this week and the fact that the company needs to take drastic action to avoid delisting from the Nasdaq. If the reverse stock split is approved, it may temporarily boost the share price above $1, but unless the company can significantly improve its fundamentals, it's unlikely to be a long-term fix, in my opinion. In addition, Mullen's continued stock-based compensation for executives has also led to more shares being issued. This kind of compensation structure is another reason we're seeing more dilution, and it raises questions about management's priorities. Are they focused on turning the company around or just lining their own pockets while the stock crumbles? So in summary, like I've said many times before, Mullen Automotive is in a really tough spot right now. The stock is down to 14 cents per share, and it's been 28 days, or maybe 27, I've got to check it again, below $1. The reverse stock split on the table might save them from delisting, but it's clear that the market is still very wary. The Volt deal could bring in some revenue down the line, but with ongoing dilution and lack of investor confidence, it's hard to see how Mullen can recover in the short term, at least in terms of shareholder value. So keep a close eye on the shareholder meeting, and this could be a bit of a key turning point for the stock, but I think the writing's on the wall for where we're going in the current trajectory of things. Anyway, as always, share your thoughts on Mullen Automotive in the comments below. I'll try to keep these updates coming through. I hope you're all doing well, and until next time, may the markets trade in your favor. Cheers.